All right. Good evening, good morning, good afternoon, wherever you are on this beautiful planet. Welcome to the Inner Circle Live Asian session. I'm your host for tonight's session, Benny Allen, and I'm definitely happy and grateful for all of you being here with me this evening as we take a look at the technicals and the fundamentals to see what we could take advantage of in this awesome Forex market. So without further ado, let's make sure that we turn off any and all distractions, grab a pen and paper, take lots of notes. Let's make sure that we continue to participate and engage. So if everybody can hear me loud and clear and you're ready to go, please drop me a 1 in the chat and we can get this session started. Awesome. Benit, Joy, I see everybody. Okay. Carolyn, I can. All right. Awesome. David, good evening, sir. All right. So let's get things going. We're going to dive right in because I want to go through several pairs like last night just to review to make sure that we're all in the right direction. So let me close out of here, move some things around, and let's talk about the dollar, right? Out of back and forth, but it's adding strength to the dollar. So we see the dollar index continue upward, its upward momentum, surpassing 104 on Thursday and reaching its highest level in over 2 months, right? The dollar's been down. Following House Speaker McCarthy's statement about progress in debt ceiling negotiations after the U.S. received its sovereign rating watch course, right? They just walked out a couple days ago, right? It's amazing. Additionally, recent data indicates the resilience of the U.S. economy to the Federal Reserve's aggressive tightening measures, with Q1 GDP growth being revised higher despite a 6.8% decline in corporate profits. Moreover, figures highlight a robust labor market as weekly claims rose less than expected, potentially reducing the likelihood of interest rate cuts this year. Okay, we were just talking about that yesterday, right? Potential pause, maybe, but rate cuts seem to be out of the picture, at least for now. The latest FOMC minutes revealed differing views among members, with some advocating for additional rate hikes, while others anticipated a reduced need for further tightening due to decelerating growth. All right. So still a lot of back and forth. If we go over to the Forex factor, I don't know why I've been having a problem with this page lately, but we can see here that the preliminary GDP, right, came in at 1.3% on a forecast of 1.1. Unemployment came in less than expected. The forecast was 249,000, came in less than expected at 229K. All right, so that's good there. If I can, let me close this out and try to go back into it. I don't know if it's my computer is issuing the site, can't figure it out. But if we come into, we've got retail sales numbers coming out for Australia, and then tomorrow at 8:30 we got core PCE, right? And so we know that core PCE, we watch that closely because it's a measure of the prices paid by, right, people for domestic purchases of goods and services, but it excludes, right, energy and food prices. So that's why it's called the core PCE. And we know that it is the US Federal Reserve's preferred measurement. So close this out because I don't know this point. But, so we will watch for that tomorrow at 8:30, as that's a pretty important report, especially on the heels of all the data that came out yesterday. But if we go over to the DXY on the daily, right, again, the talk was this weekend. We were going back and forth on this dollar and what it was going to do, and it definitely broke out. Retested that daily support and pushed all the way up beyond this resistance level, this daily resistance. So the dollar bulls are out trying to retest that level now. Okay, so as we move through the charts, we'll take a look at some of the dollar crosses and see what's going on. Any questions in regards to the fundamentals? A lot of back and forth, but we know one thing for sure is that the dollar picked up strength. All right, so let's go ahead. We're going to start because I need to make an adjustment. When I was going through this evening, I need to make an adjustment, everybody, on this NZD USD setup, which it may still work out, right? You can see it move beyond that weekly support. So this was the original setup, and I spotted this when I was scrolling through my charts once I got home. from work today, but this may still pick up and move to the upside. We're looking at, hey, it's an 80-20 move off of this fib, but my actual positioning on this fib is not right. When I went back and looked at the 4-hour, the overall move, so I'm going to make a correction on this one. Right? So if we scroll back, we take a look at this from the 4. Okay, there's previous highs, right, prior to that one impulse leg that I ran that fib off of. So, so this is what that setup looks like now. You can see it push beyond that 127 zone and beyond that weekly support. But if, okay, we back this out, and usually I'll have somebody send us a message in the inbox like, hey, you need to take another look at that, but nobody caught it last night or today. But so I'm glad I was able to go back, which is, it's okay, right? Go back and take another look at this move here. So we're gonna clear this one out and we're gonna roll back. Scroll back a bit to this high here, and you guys will see what I'm talking about. So if you drop your fib from that high in the zone there, you move forward, you see that this is where it's at right now. Okay. So I need to make an adjustment on this. Now, get lucky and get a reaction off this 118 on this fib, because this is actually the right setup. You know, if we get a reversal here, breaks back above that 60-85 weekly level, that's cool. But I want to make sure that this is mapped out right. Okay, because technically we're just now coming into the proper 80-20 zone. Everybody see what I did on that? Yes, no?
Yes.
Yes.
Okay.
Yes.
Okay. So I didn't work my way back to the highest point, right? And so when you're using the smart fib, you always want to make sure, right, to go back and then work your way forward. Right? I had just went off that impulsive leg. So we want to make sure that we adjust that. So we're just now really coming into this 80-20 zone. Right? And it's trying to reverse, but we want to make sure that we can catch things, we go back and do it the right way. So if you limited in on that previous move, right, you might be active already. Your trade's just floating. But if you were waiting on additional confirmation, trend line break or whatnot, you never got it. So you still have the opportunity if it wants to make a full reversal and a correction to the upside. So this is what this setup should look like, right? So we should be looking at a, like I said, we may be getting that reaction now, but if we draw this, right, we're in that zone now, okay? Then we look for that swing back to the upside, okay? So we're in the 118, 127 zone now. So ideally, if we could get that price, right? If you're waiting on the trend line break and you get that reaction off the that 118, that's cool, you know. Or if you want to wait to see if it continues to push down a bit, a bit deeper in the zone, like so, right? Somewhere like that. And now you're looking at a more accurate setup for what we like to do. Okay. So make sure that we get this updated. So, okay. So we're looking 100 pips there, between 100 and 105, we'll call it one. and then back to this 382. Okay, like 184. So we did have somebody ask us about, so we went through kind of fast last night about using, you know, a tighter entry, which you can do, right? But typically, what I like to do, and you could play it off the current time frame, which is the one, but just stay. Oops, I didn't know. So that's 184. What you could do is you could drop down, right? So if I want a tighter entry, what I'm looking for is a reaction at my levels. Okay, so this is the 118, 127 zone. I'm looking for a reaction somewhere in this area. So if you want to use a tighter stop, then you come down like here, right? And you can see here on the 15 where you got that trend line breaking, you got a reaction. Okay, and we know that's off of that 118 right now. You see how that, everybody see how that's moving up? So that can cut your stop way down. So, like for example, if you don't want to pull this whole fib down to the 15, then you can just draw your horizontals to represent your zones if you want, however you want to do it. So I know I'll use this green line as my 118 level. Okay. Somewhere around there like that. And then if you don't want to pull that whole fib down and transfer it, just keep your chart clean. You can mark that 127 like that, however you want to do it. That could be a zone, right? If you want to box that out as a zone, and then you just wait for a break, right? So you can see here, you got a new up AB boundary, and then there's your accelerated move, right, to the D extension. Okay, so now that we have these new upside targets, okay, this here, then we've got target 2 that we can link down. Okay. So now we can clearly see where our TP1 is. TP2. And there's that 6085 level because the market moves in waves. So here's this initial move here, just closed in and hit a D extension. Okay. So we know that we like to put our stop below the A, right? So once this low formed and price took off and broke your trend line, then you could play a smaller move like this. Okay. You put your stop below the A on that fib, and then you can play your zones. So, and then it becomes a smaller setup for you. Okay, like that. So that could be your initial entry. Now, you could take the ride, right, to that D extension and be in and out of setups like that, right? So that's like 24 pips on the 15. The stop was at about 8 or 9. Or you could say, this is my initial entry. I got it now, and I'm looking to take this, right, all the way to target 1. I'm looking to go for the ride if I can get it. Okay. So now I've got a super, right, tight entry and the risk to reward ratio improves. So as long as that stays long off that level, okay, you're looking at about 150 pips and you got your stop right below the low. Questions on that?
No.
Okay. Yeah, it definitely may move next week. So that's how you could do that. You could do that for any of these setups, right? Because it's still about support and resistance, right? When you get you know, a new AB boundary, when you come into these 118, 127 zones, especially if you have prior structure or prior zone, right? Where price reacted or the forms are low. We like to talk about fib levels, tracing levels and extensions as hidden levels of support and resistance. So if price starts to stall out and form that low, you can take advantage of those opportunities, right? So like on a pair like the, you got a new AB boundary that formed on a few of these, like this Aussie CAD. Okay, just have to get creative, right? Once you understand, right, how the sequence works, how it flows, and where your reaction points could be. Okay, so you see this Aussie CAD, this finished out, right? So that hit that 107 pip target, came right in at daily support, right? So we're good there. All right, so you can see that ABCD wave is now complete. Okay. B, C, D. Our C becomes our new A, our D becomes our new B, right? Can't make this stuff up. So that huge move is over. Now we look, okay, we're either going to correct off this B boundary off this daily support, or we're eventually going to break through and come down to that 80-20 zone. And we know how to play those setups, right? But if you say, hey, this is a support, right? A daily support that's reconfirmed by that B boundary in the new fib, right? Then you can drop down to your lower time frame and see if you can get the price action that you want, right? So you can see that this is moving sideways. Okay, we're in Asian session, it's moving sideways. But if you start to get some bullish momentum, and just like on that NZD USD that we just saw, if you get that high to form, right? Put your fib on there, let it pull back and take a shot at it. If those are the type of setups that you like. Hey, I like tighter setups. That's what I want to play. Then let it push. Okay. And then get triggered in at at your levels. Okay. Yeah. And see if indeed it reverses, makes its way to that TP1 target, right? You put your stop below that low. Okay. If you get stopped out, that's the game. That's the game that we play. Risk management is important. Right? We're not putting a house on that trade anyway, right? So if you get stopped out, well, it didn't want to reverse off that B boundary. Let's see what happens when we get to that 118, 127 zone. Okay. And then, of course, we know, right, the trend scenario is for it to get back to a high price and then look to get short anyway. Right? So some of us are just waiting on that to occur. So with this Aussie CAD, we now move this stop down above that A. If we're rolling with the trend, and we wait for price to push bullish into our sweet spot to short, just like it did on this previous. Okay. All right. Any questions on that Aussie CAD?
No.
All right. Cool. So let's go. I'm going to go back to these NZD pairs because the fundamentals around the New Zealand dollar shifted, right, when they came out dovish. So it's important that we.
Sorry about the card.
I'm sorry. Go ahead.
Yeah, I think on the for daily and the 4 hours on the 80-20 zone. If you can double check that, please.
Which one on the Aussie CAD?
Yeah.
Yep. Coming into this daily support, you ran your fib from the top.
Yes.
Okay. Yeah. Great confirmation. Great confirmation, right? We didn't quite get a 382. Stochastics been in the buy zone.
Yeah. So just in case you're waiting for it on the 1 hour, it might not, go all the way down there. I'm just saying, based on what we've seen before.
Yeah, I like that. I like that. You can see we got range bound, and then we came in, right? And now we're coming into that support level. You see the reaction we got last time, so it's going to be interesting to see if we get a reaction, right? Back to the upside on that. Nice, appreciate it. Thank you.
Yeah.
Yeah, so let's see what happens with that on the Aussie CAD. Let's go back to these NZD pairs. And just go through, I want to review them, right, to see just the price action that occurred as a result of everything that happened fundamentally, okay, with the dovish tone that they took. So you can see here how this completely turned over, right? So you're making higher highs and higher lows, and you can see what happened, how that pushed it right back below that 85.26 level. But as a result of it making higher highs and higher lows, it did create a beautiful 80-20 opportunity on the 1 hour. Okay, and this is against the yen. So you can see how it pushed up in this zone. All right, that's your 80-20 zone there. All right, pushed up into your 80-20 zone. And then it came through, right? Huge drop there. Right around that 61.8 area now, stochastic on your 1 hour is in the sell zone. So the key in what I would watch, right? Because even though they did come out with a more dovish tone with the forward guidance for New Zealand, they did raise rates, and we are talking about the New Zealand currency versus the okay, which is definitely super dovish. So what we want to watch is we want to watch and be patient to see what happens, right? You see how we're kind of getting installed in the zone here. If we start to make a U-turn and make higher highs and higher lows, break a trend line and get back above that 85.26 level, right? Then you want to start thinking, is this going to continue to get long? Is this correction over? And it's just another currency taking a ride against the yen bullish. Okay. So we'll continue to watch that and see how that plays out. So take this off to that one. Okay. Like that. So that's one to watch. Okay? Because yes, it made a huge move to the downside, but hey, that's how 80-20 setups occur. But we're in that buy zone now. But fundamentally, we know there's been a change in the tone, so let's just be patient on that. Okay. So this isn't one that, you know, I would limit in that. Hey, is that the 61.8? I'm going to go ahead and buy limit on that and let it activate. I just want to wait for some additional confirmation, preferably back above that 85.26 with a break of the trend line. Okay. Let me put the cloud on here. All right. So you can see we've got some resistance there. All right. So we'll continue to watch to see how things shift on that NZD JPY. Any questions on the New Zealand yen?
Oh.
All right. Okay. All right. So that's that. Let's move in and take a look at the NZD Swissy. Okay. Turning over. All right. Turning over to the downside. Okay. You can see how we came up to this level and it just fell off a cliff. So we may be moving back for a potential retest. But let's check it out and see what we have. Okay. There. So in your 4 hour, you got to bounce off of this 382. Okay. Very strong move as a result of the fundamentals. So that's a nice impulse leg there, right? So we know you got the possibility of a pullback. But what I'm thinking is just a further continuation down after that. So what we can do is see is, hey, here, right? Price pushed a lot higher in the zone on the smaller wave, right? You got just about a 50% pullback there. So what I'm going to say is any pullbacks, right, will give you an opportunity for a continued downside move. like so. So here's an 80-20 off of this sub fib. Okay. Strong impulsive move to the downside. Took out multiple lows, right? So it'll be interesting to see, okay, hey, that's in the zone. So if you're playing it off that sub fib, we know how to set our targets up off of that. Okay. Overall bearish. Correction off of a nice bearish impulsive move to the downside. Nice fundamental reaction. So can we get price to make a move back long? To get 382 or beyond? Ultimately, if we can get a new high price established, right, we want to see that capital fib, right, our main fib here, play out with the finish move to the D extension eventually here. Okay, so this is your long-term target off this 1 hour. Okay? And then you have your smaller waves, right, that can help us get there. So it's a longer drawn out move, but hey, see if we can get a pullback and then a continuation down. All right, so a couple scenarios there on that NZD Swiss. You can play that the same way. All right. Once you totally get the concept, you can do that the same way. You can drop down to the lower time frame on this NZD Swiss. $15-minute, 5-minute. All right, let's put the 5-minute on. See what's going on for this one. Okay. Take these levels. You can see how we're trying to get that move up already, right? I was trying to settle down, okay, in the zone. So let's see. We have, yep, so about 1 hour low here.
Benny,
Yes,
yeah, can you put the stochastic on the one for me to see, please?
I sure can. There we go. So it's overbought, right? You see it moving sideways. So here we go, like that. And hold on, let me bring this down. We're sitting at this 127 already. There, like that.
Benny, I have a silly question, may I ask?
Sure, absolutely.
So,
silly questions.
you know how you have the capital fib and you might have a couple of sub fibs underneath it, maybe 4 or 5. If there's no outside influence, is the normal play that when you add up the pips of all the sub fibs, it would be equal to that one big capital fib, or it doesn't work like that?
No, it doesn't necessarily work like that because it depends on, that whole AB versus CD move, right, could be shorter or longer, depending on how impulsive that move was, right, to the downside. So that can vary,
Mm-hmm.
right? That can that can vary. So you can still, yeah. So good question, really good question. But it lends to the overall concept of, right, when things are moving smoothly, right? So your AB, okay. I did copy. But your AB equals your CD. Okay. In a traditional sense. Okay. So like this. But how that smaller subfib plays out, you know, it could vary depending on the pullbacks and things
I
that
see.
occur. Mm-hmm.
Thank you.
You're welcome. You're welcome. So this one here, right? That was almost an equal low. So I'll play this this trend line here is like that. This move. And this is your 5 minute. Okay. Bang. Okay. So last level hit was that A6, didn't quite make it back to the 8 boundary. So probably almost got there, it wicked out. So you look at this 8-6 level here. Would have been your TP level on a smaller play, right? But now you're looking, hey, I'm on the opposite side of the trend line. It did come in right around there. So that wick happened too fast and take it out. But eventually, if it moves up, it's going to take that out. That'll deactivate. And we'll get a new AB boundary sooner or later on that if it wants to continue to move higher. Okay. And then we know that we have our target here. So that's how you can take something off the 1 hour, move down to the 15 minute, 5 minute. You can play those setups all day. Okay. Play those setups all day. Because we know, right, when we say our sweet spots, we're talking about places where prices may react when it comes to the Fibonacci sequence. We know our beat boundary. We know our 118, 127 zone off our 80-20s. We know our key pullback sweet spot zones. You could do that at every zone, right, that we trade. At every zone that we trade, you could play trend line breaks, look for a higher high, higher low, or lower low, lower high, depending on the direction that you're going. So that's how you can do it, like here, right? We saw, now if you were playing, for example, there's all types of setups. There's setups within setups, okay? So if you play around in the 5 minute setups and things like that, you had a trend line break there. And you would have had an ABCD wave occur off that beat boundary. Same thing here at this 118, 127 zone. Pull your trend line. Once that broke trend line, look at what it did. Okay. So you're looking for, and we are literally trading the same patterns, the same zones over and over and over again, and using proper risk management. We are looking for the same thing no matter what the pair is. All right, everybody follow me on that. Drop me a 2. That's very, very important. All right. So we're trading with a very, very narrow focus, and we're being patient, waiting on those setups. That way, you're not all over the place, right? And you can get sound data that way. Okay, because I'm looking, when I'm journaling and I'm taking my notes, I'm looking at the results that I'm getting from finding the same setups over and over and over again. There's only a few spots that we trade. Okay, whether it's on a capital fib, whether it's on a sub fib, right? If you're journaling, you just want to, hey, I took this. This is a sub fib that I made a play off. This is a capital fib that I played here off of this zone, right around that 50% with a daily resistance. I played that, and now I'm up such and such. Right? So you can, as long as you have a consistent process, you can get consistent data, and then you can really shorten your learning curve and compress time frames. That way.
Benny,
Mm-hmm.
sorry, this is Janice. I have a question. What
Yes,
can you
ma'am.
show again where, like, when that price is stalling at that 118 level, what trend line we could draw from where to
Oh yeah, yeah.
establish?
So, you can draw it off at any time frame, but if I'm looking for like a tighter play, right, I typically go down to a lower time frame, right? So what I did here was on the 5, was on the 5. This is on the 5 play, like this. So you know where the zone is, right? You see that on the 1 hour. So you can
Right.
always drop down to the lower time frame. It's just a good nugget to keep, right? You could drop down to the lower time frame and then just start drawing your trend lines, right? Off this high. You see this high up here?
Ah, okay. Yep.
Just so you know that you're accurate with your trend line. So now I have an inner, outer, long-term trend line.
Okay. And
Yeah.
then you would feel more confident once that breaks that trend line, that 118 stall area, that is going to go up. Okay.
So like this
Gotcha.
first wave, because the point is like anytime like here, right? Once I broke, yep, you can make that play, right? But if you don't like trading that first initial wave, because technically you see how it's starting below the trend line here, right? So this is still, I got all types of stuff going on. My stuff's a little glitchy today. But this is so below this trend line here, you see price falling. So that's my sell zone. Okay.
Okay.
And then this here, right? Once that breaks, when I'm playing on this level, this could be considered my buy zone. So in my buy zone, I'm looking for higher lows and higher highs, right? For price to start moving up and breaking back. So this was an extension. So let me take that. That was the D extension right there. But now I'm looking to see if price can continue, because there's that 1 hour 382. So this is my 1 hour 382. And I always think it's important to go through these scenarios, because this is how you learn, right? How to trade on your own, right? You don't want to just take people's trade setups and signals and things like that, because there's no independence, right? So we think it's very important, right, to teach people how to identify these areas and trade them on their own, right? That's when you really start winning. So that's that 1 hour 382. So this is just saying this is an upside target, because I've got a fib, right? I've got a sub fib that I'm trading off of, that I'm looking, if we can get this pullback, it has the potential to move here, right? Now, how you decide to do it, whether you initially launch a trade off a trend line break and you're looking to hold that trade until it gets to that 382, and you put your stop below the low, right? You get killer risk to rewards off of this. If risk to reward ratios are your thing, and you don't necessarily care about your strike rate or your win percentage, because you know that, hey, I'm going to lose some, but that big hitter, a makeup, it'll compensate for all of the losses and put me in profit. If that's your thing, you could do well. But psychologically, you have to be able to deal with that, right? Some people, they love high risk to reward and tight stops, but they can't stomach the losses. You're gonna have to work on that, right? Or try something else. Because typically, the tighter your stop, the lower your strike rate's gonna be. But if I'm in 3-to-1, 4-to-1, 5-to-1 risk to reward ratio type of setups consistently, then I'm gonna make up for those losses, right? Because I don't even have to win the majority of my trades. That's just how it works, right? It's one way or the other. Now, if you're putting your stop below that level, it's a very tight stop with a potential long-term upside target here, right? So this target off that trend line break is 95, 96 pips away. If your stop's below the A, even if you put it below this support, it's like 14, 15 pips.
That's pretty good.
You know, yeah.
Yeah.
And if you, I mean, if you're risking, 1%, you're gonna lose 100 of those in a row? I don't think so. All right. You're risking 2%, you're gonna lose 50 of those in a row? I don't think so. Now, if you're being patient and waiting on your setups, you will trade less. If you wait on your setups, you will trade less and you will make more money. You will have less transactions and you make more money. Okay? There's never been a direct correlation between more transactions and more money. Typically doesn't work like that. So, that's why we say, hey, like, just be patient. Like, yes, we get on here night after night after night. We may be looking at the same setups. Well, if it's a longer term swing and it's supposed to go 335 pips, it's not gonna happen in 2 days. Right? It's not gonna happen that quick, But if you're the type to say, I just don't like those long setups, those wide stop losses, you still should be responsible with your risk. Right? You still shouldn't be trading a house. If your account can't hold the standard, you shouldn't be trying to trade the standard just because the stop loss is tight. Like, you know what I mean? You still want to play within your normal risk parameters. And now you're just using tighter stops, right? So again, maybe you risk, as opposed to here, and we went over this before, but it's very important, as opposed to here where my stop on this smaller play here is right off that 127 zone. That stop is, call it 50 pips. So maybe there I'm only able to trade at 30 cents, 40 cents, whereas down on that 5 minute, I could trade it at 80 cents or $1, depending on the size of your account. So you still want to be really, 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 really good with your risk management, because we don't control the market. And the key is to stay in the game as a money manager. Stay in the game, because you're not going to win. All right. So ideally, this is the setup. All right. So you could take it and ride it to that 382, or you could say, I don't want to hold that long. I'm not to the point where my psychology is there, or, hey, I'm just not that type of trader, and I never will be because I don't want to be. And maybe once you get to an extension level and you get a reset, then you say, okay, I got a new fit. I've already made money off of this move, or I haven't taken that move yet, but if it continues to move long, I get a new AB boundary and I get a pullback. Now I'm in the game, but I'm only going to take it to the 1.618 extension here. So I know I have a total upside potential, of 95 pips, but how I get there depends on my trade plan and my style as a trader. Okay. Hope that provides a little clarity for everybody. Another thing that you have to be aware of, right?
Thank you.
You're welcome. If you're trading like this and you like using tighter stop losses, you have to be around for it, or you have to set some alerts for it. That's why we try to teach it different ways, because we know people have different lifestyles. As you're busy on your job, you might not be able to catch that trend line break. You can set some alerts right off the trend line break. Set an alert or an alarm or something. Whether you're using TradingView, they all have tools like that. To where if you catch it, then maybe you can already have your notes in your phone or whatnot, or your presets on the alert. You put notes on the alert to say, hey, my stop is here, my TP is there, but you have to play this game, you kind of have to be around. Whereas if I'm using a buy limit at a certain level here, and I'm trading small, say 20, 30 cents, depending on your account or whatever, that 1% or that 0.5%, 1/4% represents, I don't have to be there for that. Right. So if I've had a buy limit in this zone, I've got a wider stop loss, I'm trading smaller, but I'm not worrying about trend line breaks and being, you know, pinpoint accurate on my entry. I'm just flat out trading zone, you know, so that's the difference. So a lot of times people come into the game thinking one way, but then their lifestyle, right, lets them know quick that that way is not going to work. They have to figure out something. So we try to show people multiple ways across the board on that. So that's the NZD Swiss, because let's just face it, besides the fact that you can use a tighter stop and you may be able to trade with a little higher lot size, the fact remains we don't control the market. And if it's going to react at the zone and push higher, it's going to do it's not because of the trend lines there, right? The trend line is just for your psychology and additional confirmation, right? And using a tighter stop. Think about that. Right? If that moves up, the market doesn't know you drew a trend line, right? It's mindset, right? And how you trade in regards to you having more confirmation, which gives you more confidence to be able to trade with a tighter stop and a higher lot size. But this market reversed on this fib. This market reversed. That had nothing to do with the trend line. So yeah, something to think about. Something to think about. Okay. Look at it. Look at it happening over and over and over again. Okay. That didn't get to the D. Pushed up. Took back at least 50%. That didn't get to the D. Pushed up. Took back 61.8%. A little bit more. Same thing here. Pushed up. See how it virtually did the same thing, but the path in which it took was different. Okay. I don't even want to begin to try to figure all of that out and guess off. Okay. That's why zones are very important. Can't predict this path, this price action path. Right? But I know if it comes to my zone, right, what I want to do, my top-down analysis, if I'm bearish, what I want to do is I want to short if it comes in my zone. I know I can't control this, but I know if it comes into that 80-20 zone, what I want to look for, and when it gets to that high price, if my bias is still bearish from the top down, what I want to do. So it's just a different way of looking at it. Right? Just a bigger overall view of the market. Okay, so that's that on the NZD Swissy. NZD CAD, right? Shorting, right? Bearish moves. Okay. Like, look at this. Look at the path that it's taken. All I know is if it comes into that 61.8 zone and I'm trading with the trend and I get short and put my stop above the A, I don't know how or when, but I expect it to get to that 1.618. I don't want to get caught up in all these weeds and all of this mess here, that whipping around. Okay, I want to trade small and I'm gonna let the market do its thing and run in its direction. But you can see here, when you get these huge impulse moves, you better believe, buddy, at some point, this market is going to take some of that back. You see how that's settling down after that long impulsive move? You see that? Where you found some buyers at that level, how that's back above. So you'll start to just see it and identify it, right? That could be an area of opportunity. See there? Right. See that? And it's amazing how all these these NZD crosses are kind of similar in the price action that occurred. It's a pattern. It's a pattern-driven market. So again, if you come into some of these levels, you start to come off the highs here. Let me zoom in. Just bring it straight across. So you always want to start back and work your way forward just to make sure you're in the right direction. So you see how that's happening there? So you see how you can, once you recognize patterns, how you don't have to be concerned with trading large, because you see how all of these NZD pairs move and now how they're all reacting, and how if trading small, you could take advantage really of all those moves if you wanted to and just accumulate pips. You see how we're getting this reaction out of the zone? So then it becomes the same exact thing. Different pair, same exact thing. Right? It's hard to identify certain price action patterns if you're taking a different approach on every single pair that you trade. Right? So that's the same type of look. Okay. So you'll get to the point where it's just like you could strip the symbols off. I could just look at this price action and do my top-down analysis, and do my support and resistance, and I could pretty much gauge what may be happening, right? Where did this 15, like this. See how that made that U-turn? Bring some levels down, like so. And we'll do the same thing. So here's the high. So you notice that when I'm using that fib off the 1, I'm not worrying about dropping my fib off the top here, right? Because it can give me a different look. I'm not worried about that. What I'm looking for is I've hit my zone on my mother chart. You can do this all day long. You hit my zone on my mother chart. This is what I'm utilizing. I'm drawing my trend lines on the next time frame down, right? Or whichever one you like to trade. And I'm looking for a trend line. You can say to yourself, I'm going to get very consistent at doing it too. Right? So just take it out here. Like this. Okay. Straight across the highs. We don't want to work through the candles, through the candlesticks, or the wicks. We want to be disciplined. Right. So this one caught here. So technically, it should look like this. Because we're not going through the wicks. That, see, that's narrow. So you can decide, right, if you want to take that one off. If you want to, and bang. There's my inner and my outer trend line. And there's my reaction back above that 82.59. That. And now you are, right? After a few repetitions, you can start to see what we mean by no matter what the time frame, this market moves in waves. Bang, you just finished out an ABCD wave, right? Came in at a 786. So technically we were out there and you can see it's moving up. So here's that upside target. 1, 2, okay? Now, we don't have, since that D extension was hit, we don't have a new swing high yet. You see how this is still active? So I don't want to be so quick to draw my fib from my C, which is my lowest point within my AB boundary here, and go like this, because this candle hasn't closed and established a new swing high. Because guess what? If this candle pushes higher and closes higher, I have a new high. What does that mean? Well, on this 15-minute, that means I'm going to need another. This actually is going to work, right? Like that. So now that's established. You have to wait for that second candle to the right to close to give you your new swing. See that? And now it's pushing. So what you want to see is that if you want to get long, it becomes simple, right? It's like shopping at the store. I want a discount. I want a discount. I want this price to pull back. When it would be nice if it pulled back and held above that 82.59, because then I could get long. That's how the fibs help you. Because now if that plays out, don't know if it will, maybe it pushes up to the 127, maybe it just keeps you running. All right, we don't control that. All we can come up with are the ideas. So I can put my stop below that. Hey, if that came back to my zone, 61.8 level, it's 13 pips. If I come to the 786 level, that's like 8 pips. My TP would be 37 pips. You see how the fibs, the retracement and extension zones just set you up, put you in the proper risk to reward ratio. See, constantly, right? That's why we like for those deep corrections. And then we look to buy a discount. Okay. So you do that all day. So you got an inner trend line. We know that trend lines are like magnets, right? When it breaks one, price has the ability, right, and a tendency to move to the outer trend line, the next trend line. So if we get an inner to outer trend line break, we'll inner trend line break. Now we move to the outer trend. See, so all you can do is wait and see if this is going to pull back and give you an opportunity. If it doesn't, it'll just run to the extension, and then you try to catch it on the next play. But we know that this is the target, right? That's the target. Okay. Now, some people play aggressively off of trend lines. Right? They don't wait on pullback. So what I mean by that is if you get this trend line break, okay, say here, got me a trend line break, we closed, all right, somewhere around there. It's like I'm aggressive. I don't wait on it. I don't wait on pullbacks. What I do is I move my stop right below that low, and I play it like that. And now I'm looking to take the right, knowing that the market's going to move in waves. It's not going to move straight up and straight down to my target. So yeah, it's going to pull back, but I'm already in aggressively off the inner trend line. Right? So that's more of an aggressive move. But you can see how this trade is flowing. I wonder if it pulled that move in. No, it didn't. Eventually it'll flash. Soft, but we're way overextended now. And that should be the new high. It'll eventually catch itself up. That's why you learn how to draw manually, just in case that happens. So there's that. So you see how, right, when you look at those few key areas and you look for reactions, how you can really do well with this thing. How you can really do well with this thing. It's 10 o'clock already. Sorry, guys, I spent so much time on just these few. But I wanted to make sure that we talked about it because I thought it was a good lesson based off the question that we had. So good learning opportunity. Cool, Michelle, thank you. So just to go back, right? So this is a long running one that just continues to move, right? This is strictly a play. Hey, bullish pound, Ollie's been weak, right? When you understand that fundamentally, right, you can see how this is just continuing to, right? It's doing the dance a little bit, finally broke that level, and now it's testing, but you can see how, look at how that swing is playing out. So as long as it doesn't take out the A, it has no choice but to. Right, so that's moving pretty good. So these you just be patient with. You know, you be patient with them, and you let them run. You know, you may go to your lower time frames, okay, and you say, you know, I'm in a C to D push zone, like so, and you may go down to your 15. This. and you start to, you can see how far this is pushing, right? So we know that from the higher time frame, this is the C to D push zone, is push created waves. But if you're saying, man, like, how do I figure out how to start getting involved with that swing, then you just come down to a lower time frame and you start dropping the fib. So let me roll up here and find a location, right, where this took off. So we come like here off this low. Somewhere in that zone. And it got choppy, so I'm pretty sure some fibs will start get taken out on a lower time frame. Good practice. So we'll link this down because that's our C, our lowest point within our AB boundary. And then we can come down to the 15. And we can come in right here and we can start dropping fibs to see where we can catch the fib on a lower time. So like right here. So I know that I've got an upside target of 750 pips. So this is my long-term D extension off of this 1 hour. And that's still a ways away. So it's like, how do I catch the ride? Well, I can start trying to catch low prices on these lower time frame fibs. So if I get a deep correction, I can come here on this 15, right? And try to catch the low price. So once price comes here, gets in my zone, my buy zone, then I can look for, right, potential trend line break. To then get long. Right. And now I'm trying to get to that 750 pip target. So I caught it late, but my idea is bullish. How can I catch a wave? Right? It's like a surfer, right? Waiting on that big wave. Right? That's how you do it, because we understand that the market moves in waves and that each time frame is just fractals of the higher time frame, okay, of his big brother, big sister. All right, so that's how you can do that. Right? So you wait, okay, and then sometimes you get caught, right, where price is making a deeper correction on the higher time frame, and this gets stopped out. But you have to keep an eye on that higher time frame, because that doesn't mean that it's no longer bullish overall. It's just a deeper correction, right? So you have to kind of wait for the market to reset itself and get back long. But that's how you can kind of get involved in these type of setups that have already taken off quite a ways, because it's not going to move. You know what's left on this. Next that target, 450 pips tomorrow, unless something crazy fundamentally happens. You know, it's gonna move there in waves. Right? That's a longer term swing trade. Or if you did catch it at this low, off the 61.8, and start moving in your direction, you can use the lower time frame waves to add to your position. Get long, right? You just accumulate pips along the way. So the other one I wanted to check on was this UCAD, right? So we know the dollar, right? Bulls are favoring the dollar right now. So this is just another good ABCD wave that's playing out to the upside, right? So they'll control how it gets there and all of this mess, right? Or if it pauses for 4 or 5 days in a row and it does nothing, we just set up our trade plan, right? Plan our trade, trade our plan, and we see how it plays out. Okay, so that's a nice ABCD wave playing out there on the UCAD. So you can see we don't get too caught up in just candles or, you know, anything like that. We look at the bigger overall picture. We trade small, and we do our best to consistently accumulate pips. Any questions before we close out the session today?
Hey, Benny, I was late. Did you guys look at GBP NZD?
Nope, but I can look at it real quick for you.
Okay.
Because it's long, man. It needs to correct. It needs to correct. Let me see. Do it right. You see it? So it's trying to make its way down. You can see it's up in that zone there. So if somebody got short up in that zone, right, you should be doing pretty good because that's a pound New Zealand trade. So that's already down almost 100 pips coming out of that zone. So of course you try to get that 382. It was always tough when you get those fundamental occurrences like that. Is it's hard to know when the steam's gonna run out because it's been so impulsive, so sometimes it'll dance around. I've seen it where the reaction is so strong, it just blazes through. Like there's hardly any type of correction for 2 or 3 fibs. So you just have to be aware of it fundamentally, like what happened. Oh, okay, they came out dovish, they changed the tone and it sent the market in a tizzy. The bulls came out against the New Zealand currency. But this ain't like that's getting a nice reaction. What does it look like on the let me drop down here. If you look at it from the higher time frame, it pushed it right up into key level resistance there. Look at that. All right. That got a strong reaction the last time. So we'll see if the bears can take control for that correction. It may eventually correct and continue long, but right now it's sitting in that 80-20 zone. Let me see on the 15. 50. I thought that's the way. Yeah. We got a pull back here. Right. So we just see if we can. You got the trend line break to push down, and we got to put. It tried to move back and tried to make the higher high, but it couldn't. It reacted at 50%. So here, let's see, it's the 1 hour at the top like that. If you drop down to the 15, yeah, you're 2 fibs in now. All right. So whereas you started here, right now you're here, and we're trying to get price to pull back and then continue down. Okay, but you all see it's cleaner on your lower time frame. You guys see that crown type action here where that low was taken out? See that? Or it was making that ABCD wave, fell, took out that low, and then pulled back. That's called many things. That's called many things. But that's it. That's a crown. That's a crown type formation. And you can see how it pulled back, like on this previous fib, right? What it did to finish out. Look at that. And then down. So now it's just a matter of, do we want to pull back higher and then continue down and eventually get to this 382 target. Like this. Like so. Okay. So you all see how it's literally the same thing, but now this is sell side, how we went over those NZD corrections that were in the 80-20 zone on those sub fibs, how it was buy side, and we were looking for the push up and then the pull back and the continuation after the trend line break. You see here now, this is sell side, right? Selling off the high price. Okay. See that? So it's like a mirror image. That's the beauty of it. You want to work your trend line without going through the wicks through your high point. can see how we're starting to work our way down. Okay. So ideally, we want to see pullbacks. So, so far, so good. We'll see if that continues. See if that continues, if the profit taking continues on that pair. But it gave us confirmation off that initial trend line. So let's see if we can continue to get it to move down after we get a new high prices. Questions on the pound NZD? That was a good one to go over. It's a lot of them, actually. You're welcome. All right. Well, that's gonna do it for us this evening. Appreciate you all for joining me for the Asian session. Everybody enjoy their Friday. Of course, we'll be back on Saturday, 7 a.m. Eastern Standard Time for the Forex Weekly Ritual to see what else we could take advantage of for the week to follow. Have a good night, everybody.
Okay.
Yeah.
Good night.
Good night.
Thank you.
Welcome.